I'm Justin Roberts of Biz News, and with me for today's market insights is Sasfin Securities' David Shapiro. Lots to ponder over the weekend. The news and subsequent knee-jerk reactions of government to the Omicron variant was rather predictable, with global markets tumbling on Friday. The hysteria has seemed to cool, at least today. Were you buying any Black Friday specials on the stock market, David?
I was tempted. But you don't want to be silly because we didn't know how bad this is. I had an inner feeling that it wasn't because just anecdotally, even though this virus was around, there weren't reports of heavy admissions to hospitals or hospitals bursting at their seams. It just seemed to it was normal. Yes, things were picking up. So I all the time I felt that maybe this was an over, not an over exaggeration, but an overreaction. I still feel at this stage it's like that without any kind of medical substance to support what I'm saying. It just doesn't feel as bad as perhaps the other outbreaks have. So yeah, I think we've got reason to feel victimized. So anyway, mm, it's going to happen. This is going to keep on happening.
I was scrolling Twitter this morning and I saw a tweet
Mhm.
from Dave Hazelwood. I think you would be best placed to
Yeah.
answer this, David. As an investor, do you ignore virus/variant news, or do you try and keep us at best you can, considering what happened to markets on Friday? Does it depend on your time horizon? E.g., long-term investors will largely ignore, while short-term traders will pay special attention.
Yeah, definitely. I think even March 20, when the markets fell in a heap, I think that anybody who went back in history would know that markets tended to recover very fast. We didn't expect it to recover as fast as it did, but I still believe that medically, even now, we're in far better position. There's so much money has been thrown at the vaccine and so much at this virus that I don't think, it's not difficult to come out with some kind of solution. The only thing we can't control is people's desire to get vaccinated, and that still is the overriding issue. And I think if anything, Justin, if anything has been shown, is that until the world is vaccinated, we're not going to be safe. We're going to get these outbursts, and we're going to get these inconsistencies.
Standard Bank trading update looked good this morning, trading back to pre-COVID levels. The banks are trading at very cheap multiples. Is this the market trying to say, as a result of fintech and all the innovation, that some of these banks' earnings are not likely to grow over the next few years, and these challenger banks that we're seeing, more innovative, fintech, technology driven, they're going to start taking market share away from the big traditional players?
Yeah, I'm in that camp. I think you're right. I think I they're not exciting businesses, and I think that investors today are looking for exciting businesses. So for me, unless they can do something innovative, it's going to be very difficult. We're not in the kind of environment where people are splashing out and buying new car. I mean, yes, there's an element of it, but it's not boom times in this economy, and therefore banks will prosper when economies boom, when you want to put up new factories, when you want to expand your factory, buy new machinery, experiment, do things like that. That's when I think banks will do well, or when you want to, when there's plenty of M&A activity. But in this kind of environment, it's very difficult. I'm talking specifically in the South African environment. I think it's very difficult, and I think they'll probably continue to trade at these low multiples. Justin, it's hard as well. There's another element to it as well. The JSE is very thin in volume. I monitor it. It just shows you that the level of participation is just kind of falling away, and therefore people who bought banks have bought banks. I don't think they're going to aggressively go out and seek. And the inflows are not coming in. As an economy grows, you get more inflows. You have to expand your investment horizons. That's not happening. So I think, yeah, yeah, you can take a fair share of banks, but I'm not sure you're going to get the kind of returns that that people are projecting.
as you say, David, the local banks are proxies to the economy, which is stagnant, which is not growing. We've seen clothing retailers surprise to the upside in their results in recent weeks. Which industry is more exposed to economic growth and prosperity? Would that be the discretionary retailers or the local banks?
That's an interesting question. I think the upside gearing is in the retailers, mainly because they hit directly at consumers. And banks can't. Yeah, a Capitec can benefit from consumers. It's right. It's down at that bottom. It's down at the lower income levels. But I think banks really rely on big industries as much as we say, or alternatively the housing market. So the bigger markets. I think that your clothing retailers, you turn over the clothes. We're going into those buy now, pay later prospects and that, which are also very encouraging for retailers because it means that people are going to be spending more. Does it help banks? I think there's certain banks that are going to go into it. The innovative bank will go into that, and that's where it's going to happen. I would imagine Capitec would be first into those kind of areas. So the clothing retail at the bottom end of the clothing retail is still attractive. Yeah.
Interestingly, Impala Platinum going for the jugular, announcing
Yeah.
its firm intention in a part cash, part share deal to buy Royal Buffer King. There's been a cat fight with Northern Platinum. They recently took a 33% stake of the business. What's your high level take on the announcement and all the interest shown in Royal Buffer King?
I'm trying to work it out, and I mean, they're now paying this massive premium, but they're only buying about 23% of it. Maybe they're just waiting on the sides and ready to pounce. And also, I think they need to get rid of their money. That's a bad thing as well, that they're building up cash reserves and don't want to go and, not don't want to start anything new, which is also not a show of confidence. Rather than expanding into a new mine or doing anything, maybe they fear shareholders. So this is an investment. This is an investment in another operation. So it doesn't really add to the economy. It doesn't help us anyway. It just helps Royal Buffer King get a little richer in that. But I would prefer to see Impala just taking some kind of risks now and starting to expand, create employment, create a new infrastructure somewhere else. Because every time you sink a shaft, the multiple effect is quite dramatic. I don't think we understand that. You're creating employment, you're creating investment growth. So
David, the S&P 500 is heading for its third consecutive year of 30% returns, this year at around 26% year to date. In the last 50 years, David, whilst you've been in the market, it's only had one period of double-digit growth 4 years in a row. Do you think 2022 is going to be much of the same for equity markets?
no, I think it's going to be a lot harder. Maybe the first few months, but it's going to be tougher. And one of the reasons we're seeing this growth is something that we have never witnessed before. Right from the outset of the century, from 2000 on, we've had low interest rates, virtually zero interest rates, and of course that's helped equity markets. It hasn't helped, and each time we get out of a crisis, another one's come that's forced us to reduce rates again. So we had the internet bubble, we had issues around 2007-08, and now we've had this pandemic as well. So for people using the 60-40, balanced funds, it's been terrible. It's been very, very difficult. So it has favored markets, and therefore those who managed to read this, have done better. But for conservative investors, traditionalists who have gone 60-40, 40 being the amount that you put into bonds or other assets, they have underperformed the market. But Justin, I'm setting a very low bar for 2022. If I can beat inflation, I'm talking in dollar terms, just stepping over 5 or 6%, I'd be thrilled. But not 26% again. I hope I'm
Lastly,
wrong.
Dave, lastly, David, this new variant, how much of a risk is it to equity markets?
No, I don't think so. I think we've already discounted it. You can sense that it's not serious, and that it will be controlled. So I'm merely giving you an inner sense, or what would you say, just a feeling, trying to read what we're seeing now. I know the media, they're pumping it up, and I'm talking about the American media and even the British. Yeah, they're pumping it up, trying to make it, trying to get people to come and listen to the stories. But I think markets will probably brush it aside and slowly recover and get back on to that upward trajectory that we've seen.